Hello guys and welcome to my channel. Now this is a special edition tutorial if you want to trade natural gas. This is the weekly chart on natural gas, and natural gas is very volatile. You need to be very careful. So I personally only enter this market when I see something that is uh, like for me almost 100% accurate, and unless I see a pattern that I can trade, I don't enter the market. For example, we had this sort of W pattern here. This was an easy trade because we can measure. This is the weekly chart. We can measure the, if I usually don't measure the weeks to make sure. We can measure the bodies, and let me show you this trade. I'm not sure if I played this trade. Probably I did. I'm not sure about that one. I don't remember. But we can measure the bodies of the candles and put it right here. This is the neckline. I can also draw the neckline here. This is the W pattern. And then the target is right there, and it was hit 6.23. We can also measure the wicks. Let's see, we are measuring the wicks, and then the top of the wick is actually the neckline, so the neckline is right here. Then the target is 7.56, and even this target was hit out of this pattern. And when my target is hit, I usually get out of the trade and I just wait until I see a pattern. So I don't think I was in this trade, in this uptrend, because I didn't see anything and I don't want to lose money. But this one, probably, I'm not sure, probably I was in that trade. And then I waited, and then we wait, when we get out of the trade, wait to see what happens. This market can go up a lot, but we are not in because we don't know what's going to happen. However, on the weekly, I noticed this wedge, which is a bearish wedge. If I connect the bodies of the candles, not counting the wicks, then we can clearly see it's a wedge, a bearish wedge, suggesting that sooner or later this market will just fall down, and the target is actually the bottom here, 6.56. Now this is a huge trade if we can catch it and start it at around 8.7. But when I saw this wedge towards the end, I was able to play with small short positions. Small because you can see this big wick to the upside, but it's a wick, so this can have wicks until it breaks down to the downside. Now, of course, it is a weekly chart, so it may take weeks to come back to this bottom. But this is a sign for me that I can play, and once we break down, of course here you can see a breakdown as well, and if you play that with a big position, we need to look at the daily chart. I don't remember how it was. Did we break down and then we had this wick to the upside? But it's still dangerous here. We need to be very careful and enter with a big position later, or with a stop loss and then re-enter again. Let's see how this trade played out. As you can see, we had a very big red wick, so immediately the following week we fell to $7 area. This is a huge profit already, so if we are satisfied with the profit, we can get out of the trade right here. But of course the price target is right there. Let's see if this was fulfilled here. Of course it was. In fact, we fell below that level. So this is one of the trades, a big trade, a very big trade, very rare occasion that we can trade natural gas so clearly, like for example with these two patterns. And even now we are in a trade. Let me show you. We waited after that. Of course you can play with the, probably I would play with small position between the 20 and 50 EMA on the weekly. If we stay above the 50 EMA, probably we'll get to the 20 EMA. If we can break above the 20 EMA, probably we will have a bull run, but I don't know how far we can run. We don't know, so we need to be very careful then. So it's not a big trade for me at all. And then on the daily, this head and shoulder pattern developed, which is a very good trade for me. And here's the neckline. Of course, it's not very clearly seen here on the weekly, but on the daily you can clearly see we have a nice neckline. The price target can be measured. I think this is with the wicks. Yeah, with the wick it's 5.6. If I don't measure the wicks, then it's around 6, 5.9, 5.6. So it's telling me that we are going back to probably to the bottom of this bull run here. Now, what happened here? We came below the neckline, but we had a run up again. So here we need to be careful with placing a big short position. I eventually placed a big short position, but right here we need to be careful. Start with a small short position because we can have a wick to the upside, just like here in this pattern. But eventually the market will turn down, and then I remember we spent some time here at the 20 EMA. We had a week to the downside and we came back above because this was a support, and then we continued, and I shared with you that once we break down we will probably get to the 50 EMA, which is exactly what happened. However, the price target hasn't been hit yet because the price target is down below the $6 level. So I'm still in this trade. I'm not closing my trade yet. I want it to hit $6 level. And right here we have a wick, and we came back to the 50 EMA. This is a support line. So if I only look at the weekly chart, I would probably close my position here because it's possible that we come back up and run up to the 20 EMA, which is at around 7.47. However, I'm so much convinced of this head and shoulder pattern that I'm not closing my trade. I think we will break down below this level, and once we break down, of course, we need a weekly candle closing below this level. We will probably have a run down to under 6, even to 5.6-ish area, and there what could happen then, of course, around 6, because I want to make sure I'm successful in these big short positions, I will close my trades. But what could happen is that we come back up after hitting the target, we come back up to 6.5, and then this will prove as a resistance if we had a daily weekly close before that. So we broke down below the $6.5 level, then it was going to prove as resistance. So we might come back to this area again and then drop again. And of course, if we break back above, once we break down, after we broke down, if we break back above there, then we could come back up to the 20 EMA, and above the 20 EMA we could have another bull run. So right now this is what's happening here. We came back to this level, even above this level, because this is a support, strong support. We only had wick to the downside. We will probably spend some time here, but I expect natural gas to eventually break down below this point because of this pattern. Otherwise, just like here, we only had wicks to the downside below this 50 EMA. We could have the same here, but as I shared, I do believe in this pattern, and so I don't think we will stay above the 50 MA. We will probably break down. So that's how it's good to trade natural gas. Wait for a pattern, wait for a message. Don't enter a trade unless you see it. But once we see a good pattern, then we can even enter with a big position because that pattern will probably play out very well, just like you see I shared these three patterns here with you, and they played out very well. And I guess once I get out of my big positions, big short positions here, probably I will play here a little bit with small positions, because that's what I expect natural gas to do. But then probably I will wait for another pattern, another message that I can enter. And of course, for a long time we don't get any pattern or any message from the chart, and we don't play it, we look elsewhere. But these are beautiful patterns, very rare occasions that we can play or trade natural gas so effectively and so big. I mean, big moves. We can trade these big moves. We can have huge profits out of that one. But it's worth waiting, because otherwise we could lose all our money. We just don't know what we are doing. So be very careful, wait for the right message of the chart and enter a trade only if you are sure that it's going to play out very well. So have a successful trade. See you next time.